So I'm old enough to remember that like even the best IPOs used to be 50 to 100 to 200 crores of issuance size, right? And today it's mocked at because VCs can throw that kind of a money in a single round. And of course, the market evolves. It's like market is 10 times the size. The index is at 10x value from not too long ago. So you can't have the same size to be able to sustain interest in the market. Combination of worrying about whether the regulator will allow unprofitable companies to list, combination of whether the liquidity options get any better than in the private markets post-listing, and the fact that issue sizes and what we call analyst coverage actually can kick in for subscale companies. These were the fears that consumed Indian venture capital. So nobody wanted to list actually. Our theory was the wisdom of the public market, the necessity to push towards profitability, the liquidity and depth of public markets is all collectively 10x more valuable in the long term and deeper in the long term than the private markets. So that's my harsh take. There's no amount of SoftBank, Tiger, and all our brethren in the venture capital industry who can ever compete with the might of the public market appetite. Interestingly, even for risk, I would argue. My underpinning on this is you can't fool the public market. Right? You can fool the private market a little bit, but you can't fool the public market for very long. There are bull market runs in public markets and people go crazy. Don't mistake that or misunderstand that for your ability singularly to be able to fool. You can ride a trend, you can crash with the trend, but you can't like singularly take the public market for a ride. Most of the folks who have tried that have crashed and burned. And that will be a vicious fall compared to a private market, fall where something's written down to zero and nobody hears about it. There you'll see it, in a slow train wreck in slow motion. So I think, therefore, the fear is if you're not predictable in terms of how you are going to be able to deliver outcomes, don't go public. But once you are, I think all the other excuses can be overcome. Right. And so we tried to convince, we didn't have that scale, to be honest, till 2020 in most of our companies. And today, maybe Purple is the largest of the companies in terms of revenue, which is getting close to profitability. But there are 5 companies on their heels. And ironically, there are companies which are much smaller, but much closer to profitability. And while a lot of them may not listen to us and might listen to the, again, wisdom of the public market analyst crowd and the bankers, etc., we actually managed to convince a couple of them to go SMB IPO, which unbeknownst to most people, that's what I said. You can't say tech can't do this when 200 other guys have done it. And there were 200 public SMB issuances between 2012 and 18. So it's like, how can we be so different? I'll tell you the problem. The problem was most companies had raised so much capital and were valued at a price that the public market won't support. That was the last nail on the coffin. And so you couldn't go and you couldn't digest the fact that you had to list at a down round. Today, the biggest unicorns are listing at down rounds because you have to leave money on the table for the public market investors. Otherwise, they will punish you. If they feel like you've hoodwinked them and priced it too much and the stock crashes to half, it takes a long time to recover both the trust and the price. So that was the biggest challenge, if you ask me. So people said, you're really listing companies at 100 crores? I said, yeah, we're the only investor and the guy has been bootstrapped for 5-7 years after that. So none of us are losing money, or we are very happy with the fact that we can go raise from somebody and raise 20-25 crores. And that's how Infolian and E2E happened. So the SMB market is not likely to be too ideal for too many tech companies because we're giving them so much capital that they're already sitting at few 100 crore valuations. So it'll be difficult to then downsize them and go public. What in the traditional definition of small, mid, and large cap, I think this crazy chase for trying to be $1 billion plus company in the public markets, I think is a wasted opportunity for more than 50-60% of our IPOs to come. So I would predict, like I did in 2019, I thought there'll be 40 to 50 IPOs by 2025 end. That included all these categories. I think it will happen. Today, I think we're close to 2025, and I think in the next 15 months, we will have a lot more. Now, if you take 2025 to 2030, you might have 100 or 150 or 200 IPOs. And I think it'll be a mix and blend of these. The large unicorn plus IPOs will only be 25-30% of them, is my future prediction. And that is what's been missing as a narrative in the market. Because most people thought, oh, you can't IPO until you're at a certain size. By the way, as everyone is making these comments, IndiaMart, Nazara, Ease My Trip, they all went public and they're just compounding there. And lo and behold, they're using the new currency to acquire companies. They're taking minority stakes. They're building new businesses. All of them have done that with public money and growing in the public glare and compounding value. So I think that's the future that I foresee in our ability as an ecosystem to leverage public market. Hi, this is Karthik Reddy. I'm one of the co-founding partners at Blume Ventures. Thank you for watching, and please subscribe to our YouTube channel for some wonderful content we're bringing to you.